Good evening, everybody, and welcome to this edition of Live Market Analysis Carnage style, okay? Because on this Monday, 5th of August, markets have taken a tumble, and we'll obviously investigate all of that and much more. I'm going to try and censor myself. It's been something that's been a challenge to do today as well. We'll talk about that after we get to the disclaimer, which says that everything we're going to discuss is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this very general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Trading and investing is risky. I say this every week, and we've had such a good run in markets, you're probably wondering why I keep saying it. Markets might not go the way you think. You could lose money. Always remember, it's you and not I who's responsible for everything you choose to do. On that note, you know the drill. Ask away questions, technical analysis. I expect we're going to have a bunch of SEEs, species ending events today. It's going to be pretty self-explanatory. I mean, and that's the good thing about this system. I don't think there's going to be any big question marks as to what we have to do. Let's head over to the Amy Broker screen, which is going to appear on your screens in about 4 seconds. Start counting. We're going to kick off with that one. The Nasdaq Composite, which is one of the two portfolio management indices that we keep an eye on. And, you know, ironically, blame me. If you have to blame someone, it's really only me you can blame who moved away from this towards the Russell 2000. And, you know, we acknowledge, we sat here on what, 3 Monday nights now, and we acknowledge that there are issues here. We noticed on this big candle, we would have said it, pretty sure we did, even on this gap and run, lower peaks, lower troughs. I mean, we said, and in fact, go check the tape last week. I said, if this was your portfolio management tool and this was only your portfolio management tool, you'd be at 1/3 risk. You'd have 2/3 sitting in cash and 1/3 in the market. And I put to you really on that day there, that would have been the day you said, look, towards the end of trading on that session, I'd be getting out, or you probably would have done it here. I don't know what's going to happen tonight. So you could be completely in cash there. But we split it. We split it to acknowledge the fact that, to be fair, for a very long time, and this, unfortunately, it turns out like this in markets. Each time is a bit different from the last time, and in all of the instances of all bull markets that have come before this, we haven't always had that sort of concentration that we've had this time around. So it's a little bit different, and even somebody who's been around as long as me, I wouldn't say learning, but you do get more smarts about you. And I thought, okay, the smart thing to do is we're having this rotation, the broader market, and this is the thing, the broader market. So what I've been conditioned to do, or what I've learned over many years, is follow the broader market, right? Follow the money. And the broader market was heading up, and we probably should zoom out here. And I don't think I had log on a different one, not on this one. I was using log charts earlier on in the night. I'm just checking I'm not still on them. And we're watching this, and this was going gangbusters. And even, last week when we said 1/3 on the Nasdaq, this was still fine. It was probably somewhere up there. And then we got this candle here. I wasn't obviously broadcasting on that night. And then we got this one, which is a turnaround. Not that would have caused us to do a whole lot, I think, but certainly it would have caught our attention. Then we've got the gap and run, and who knows what's going to happen this evening, because part of it is, a lot of it is to do with the Nikkei. We're going to look at that in a sec. But, we came to the conclusion last week that we would be largely risk on. We'd full risk position in most cases, and then we found a lot of great looking stocks. And the problem is the problem didn't come from here. The problem didn't come from this chart. There's a reaction, and the reaction is very mild. It's very modest at this stage on this chart, and of course on our own ASX 200. I got whacked today. I know you got whacked today, but actually we're still not that far away from the highs there, and it would only take a half decent bounce to get us even closer. I know that's a silly thing to say, but I just don't think we're that far away. And the problem obviously came from here. So it didn't come from the stuff we normally look at. But then, as you know, after we look at our portfolio management model, we then go around the traps and we look for red flags. We look for red flags, as I say every week, to challenge our portfolio management thesis. Is there something coming out of left field that could all of a sudden be a problem for the market? We looked at this last week, and I want to say it was that candle there. If we go back 5 candles, if that's Monday, Friday, Thursday, Wednesday, Tuesday, Monday. So we sat here and we looked at that candle. And, I'm not trying to make excuses here. I don't think I need to. But is that a red flag? It wasn't great, but it certainly wasn't a red flag. And I guess we only broadcast once a week here. So I'm sorry, I didn't catch the problem, the canary in the mine shaft that exploded today. And we'll talk about why it exploded today. And we look at stuff like this and we say, okay, well, China, it's going down again. Like we know that it's sort of the slow motion train wreck. We're aware of it. And unfortunately, this Nikkei thing came out of left field. And there are people that argue, hey, I knew it was going to happen. Okay, holy dolly for you. ASX 200, again, take out the last two candles and you're there. You are here and, not looking, where I'm going with this, not looking too darned bad at all. So what was it? If that was Thursday, was it Thursday or Friday morning? I can't remember. I said, hey, everyone, I got, 39 charts on the long list. I can't split them. So, I got ChatGPT to randomly select 20 of them, put them up. And then today, ironically, I had literally, and this is bookends in the way markets work. I have 39 charts on the downtrends list, and I said, ask ChatGPT to pick a selection of them. Let's keep moving, shall we? I don't think we need to look for red flags because I think we've found them. Let us go to another part of the problem. I think this is the red flag I missed, and this is the bit I regret. Not the Nikkei so much, but the Nikkei has to move. It's got no choice. It must move. The Nikkei is very much a currency-driven market because all of investing in Japan is a currency-driven market. It's been forced to be that way since the late 90s, really, because of Bank of Japan policy, and that is to effectively run zero or negative rates for various periods of time since then. And it's all to do with the property market collapse in Japan and the big bear market they had, the Nikkei from over 40,000 crashing over subsequent years. And ironically, it's somewhat part and parcel of a maturing market, a maturing economy that goes from a huge manufacturing base into sort of spreading that wealth in other ways, and that's what's happening or has happened in China, where we've had huge investment in property, and now that's coming off, and that property, the deflating property bubble, then crimps consumer spending, and you have central banks that are endlessly trying to fill a bucket with a hole in it by putting in more liquidity. But yet, there's almost no way you can get the consumer to spend because they just don't have the confidence to do so. But we are getting into some pretty serious macro themes now. I did get a question about the carry trade and what's that all about. You might be saying, hey, Carl, what's your qualification to talk about this stuff? I do have a degree in economics and I have been in the markets for 30 years, so I've seen a few cycles. And there is this thing called the carry trade where, because of this low interest rate environment in Japan, and a normal interest rate environment everywhere else in the world where, Japanese rates are next to zero and you can get 4 or 5% or even 3% or only 2% or only 1% at times anywhere else in the world, it's still better than what you're getting in Japan. So a lot of capital went overseas. We have discussed this, and the idea is you would borrow in yen and you'd invest anywhere else, and the difference between the spread in the rates would be your profit, and it's just a tick, 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 tick. It's just such an easy trade for these guys. It's easy money. It's small margins, but when you do it over huge amounts, it is very, very lucrative. It is the bread and butter of the Japanese financial system, dare I say, to a large extent, a huge portion of global financial investing flows. So what happened is on Wednesday, and I didn't pay enough attention to it as well, and I regret not paying more attention to it, obviously in hindsight, is this thing here, where if we go back a week, it's there, it's I looked at it and I just didn't follow it up, and partly because, I'm very busy writing articles about stuff that probably doesn't matter as much at market index, and that it's a 0.15% increase in their official cash rate over there, the policy rate of Bank of Japan, and that was unexpected. You can see there the forecast was 0.1%, so we weren't expecting them to pop it up. And obviously what that does is a bit of a sign that the Bank of Japan is starting to unwind this low interest rate policy regime. And therefore, if you can start to invest in Japanese government bonds, and I'll show you the yield on that. Coming in a second. So, we were looking at 10s. The 10s were creeping high, but not doing much. But it was the 2s that obviously had moved higher on anticipation of this and spiked to nearly 0.5% there. And, it sounds like a ridiculously small amount, 0.5% versus, 5.25% in the US, 4.5% over here. But it just takes a small move, again, because it's such a huge trade. We're talking $70 trillion worth of a carry trade. It only takes movements at the margins to cause absolute chaos, and that's what we saw. So there's a bit of a rotation out of Japanese equities, and the other factor of this, the third pillar. So we've obviously got the Nikkei, we've got these bond yields which have responded to the Bank of Japan. So there's the Nikkei chart. And actually a little bit of rally there after hours. That's a Nikkei chart. And then the other pillar comes in the foreign exchange, of course, which is the source of the carry trade. So if we look at Aussie yen, if you're going to Japan, forget about it. It's at 20%. Now, 20%, this is a currency. This is all of the value of Japanese assets, really, in terms of currency, and all of the value of Australian assets. Moving by 20%, it shouldn't happen, it doesn't happen. These are so many standard deviations from the mean, what you saw today. And the carry trade has been around for a generation, a whole generation. You've got investment bankers that have gone through a 30 or 40 year career knowing only the carry trade. And today it potentially has begun to unwind. And that's because we're a funding currency, because our rates historically have been higher than the yen. So we are a target there as a funding currency. Plus we're a risk on market, and the world went risk off. And of course the big move came in the yen. I missed this. I didn't see it. Although even if you looked at it last Monday, it was like at the Nikkei level. We know it's come back. We know it's we're waiting for a dink sort of thing. It just happens so quickly where everybody got caught out. Not so much caught out, but this is all about foreselling. So what we're seeing here, as I said, we've talked about the three pillars. We've talked about it's a big amount of money. Only marginal move will cause this move. But what it is you, on top of the boring Japanese pension fund that's doing this, you've got a bunch of momentum-based money that will spill out when the momentum's gone, and you've got leveraged money as well. You've got money that's trading on margin. And what we're seeing here, when you get these big black candles, the only way you can get those extensions is obviously two things I talked about in tonight's evening wrap. Number one, you have motivated supply. That's the first part of it. The supply needs to be, I need to get the frick out of this, either because I'm nervous or I'm getting liquidated. My broker's not giving me, my broker just liquidated. I just got the notice, mate, you're getting liquidated. And brokers, when they're liquidating, brokers are trying to cover their asses, trying to cover their asses and their assets of their firms. So they are not looking to get the best price. They're looking to cover their asses and get the hell out. So again, that price discovery process is somewhat disjointed. And then you're selling into a vacuum. That's the second part of the equation. You've got a demand side vacuum where people are saying, I'm not buying that. I'll buy in a week's time. I'll get pretty close to the low, but at least I'll have some sort of inkling of where the low is. I'm not stupid. I'm not going to try and buy here and see where this thing's going to end up. And there will be traders trying to trade around that, a lot of them getting roasted, toasted, sliced and diced. But the big money won't touch this candle because they just know that they know better. And that's why we get stuff like happened today. I think the Australian reaction was mild. Oh, Carl, I think it was mild, but we will see in the coming candles is probably the only sensible thing I've said since I've started talking. Hopefully I've been able to, as I said in my evening wrap tonight, it was beyond the scope of me trying to explain all that in words. And not that you're the only ones who get the benefit of this in words, by the way, because you're the only one that have ticket on Monday nights. So hopefully that was, as I said in the evening wrap, pulling some of the threads together for you as to what the hell happened today. It was exacerbated by, I think, leverage unwinding and margins getting called in. which I don't. Do I need to show you anything else around the world? Do you want to see the price of gold and silver? I don't. You know, does it matter? Silver's tanking. Gold's actually not even going up. And you know, if gold was ever going to go up, it was going to be this environment. But it's not even gold's going. Look at that, copper's just tanked. Iron ore actually held up pretty well today, surprising. And if you're a uranium fan, you're not that way because of me anymore. That's for sure. I've got you off that bandwagon, and that actually has turned down. It's just confirming everything we know about trend change. Let us head then, rather forlornly, to the offline request, and I only have one, which is SGR. Which probably wasn't a bad place. I was going to say wasn't a bad place to hide today, and no, it just hasn't turned out. This was an aggressive setup. If you remember, we liked the base pattern. We liked the big white candle, and there I go. I even said a third instead of a sixth. So I must have been really keen on it, and no, it hasn't turned out. What do we do now? Claire's asking. Change the screen. Thank you. Good. Yes, it's been that sort of a day. Appreciate that. We're talking about SGR, and we added a third on an aggressive setup. Obviously, it hasn't worked out. It may be if circumstances were different, it would have. But I think it's still okay. None of these candles in and of themselves are wipeout candles, are they? I mean, this isn't great, but look what happened today. Here's the demand. It's under here. It's there. It's maybe even there. And I think they're the levels that you want to watch. And as long as we don't close beneath those levels, I think you're okay. And it's just a matter of deciding, how much you want to lose on it if it gets there. It could be a tough environment for all trades going forward. Just decide whether you want to be in this or be in cash. I know that's a rather bit of a cop-out answer, but let me make it even clearer for you. So I'm not copying anything out. Look, minus the third we put in on a close below whatever that low of that candle is, okay? And that was actually Claire had a couple of US ones, but there was another person. I didn't take your details down, sorry, but I can find your name. Might have been Brendan. Brendan said, "Hey Carl, what the hell happened today? What is this carry trade? Can you explain it to me?" I think I've done that. Okay, let's go to your online requests, which are also few and far between, because I suspect we're in a little bit of a shell shock mode. Hanelli's asking about CSL, and we're going to go here and investigate. What was unfortunately a very strong chart. We're going to say that quite a bit today, and don't get confused here, okay, about, it's just temporary, or all this stuff will blow over. None of that matters. The first 25 minutes of this presentation is me helping you understand what's happened, but that's irrelevant to this. We just follow this now. Okay, we've got price action, we've got candles, and we just do what we've been told to do here. And we forget what's happening in the world because it's irrelevant. Price action is all we need to know. And therefore, with not in the right place, let me go here, turn that off. I'm going to beat you this time, maybe broker, with this. We've taken out this trough here. Unfortunately, there's a couple of troughs there that are taken out. Today's candle is not ideal. It's not the one we want to see. It doesn't have a lower shadow, it has an upper shadow. And as defensive as CSL is, I'm certainly minus a third here and probably minus 2/3 and maybe just keeping a third on the basis of this long-term uptrend ribbon. But that's as far as I can go. And yeah, at the end of the day, it is always up to you. And that is not a cop-out because it is. And I will tell you what I would do unemotionally, clinically, as per my model, and then you decide how you want to handle things. Will CSL go back up to 315? And if you don't follow my model, could you get away with it? Could you make any losses you have back and then some? Absolutely, that might happen to you. Or it might not. It might keep going down to 285 and you'll say, shit, I should have got out. Let's go to EOS. And I feel we're going to go ditto many times here on stocks that last time we looked at them were FRP, and unfortunately now it's just the way it has to work. I'm sorry, I can't. I'm a ZRP here, and we're going to do this a lot tonight. And this is just the way trend following works. If there's no trend, we get out and we just wait. And and some of you came into this process late. You'll be frustrated because you might have started trend following 3 weeks ago, and you've just given back all your profits, and maybe you've got nothing. It's like, well, what was the point of that? Well, I'm sorry, that's the way it works. We've got to wait for the next trend. The good news is you'll be at the start of the next trend, and you'll make money in that next run. Just be patient. Some of you may have got in on the last day before, and you're just losing. I say the same thing to you. Some of you, and I think this is where many of you do fall into this category, you've been following the trend for 6 months, 9 months, 12 months, 2 years now you've been listening to me. You've done really well. You've got a blood nose today, but you've still done really, if you look back, I did pretty well, or I've done better than if I was trying to do it myself. My own crazy stuff I was doing before I started using this methodology. Okay, don't stay the course is the way to go. Don't revert. Don't say, oh, it'll pull back. It's just a pullback. Things are looking valuable. Maybe that's gone down a lot. I should start to buy that. Stay the freaking course. Protect your capital, protect your capital, protect your capital. Wait for the next trend. That's all it is. You might have some shorts. You might start playing a few more on the short side. Don't go crazy on the short, because the market will bounce at some stage. It's just follow the trend, follow the model, follow the trend, follow the model. Zero risk position, sorry, EOS, because that's what the candles are telling me. I don't know what the fundamentals are. I don't know and I don't care. And we're going to look at some charts that were looking really good. 2 weeks ago, we said FRP plus 1/3. I don't like the last candle. I'm sorry. We've got lower peaks and lower troughs. And I don't mind. And I'm not, when I say, broken record or whatever, I'm not saying that because I don't like to say these things again. I'll say these things tonight as many times as it takes. So when I say that, I'm not trying to, put anybody down for asking the question. This is the response is the same. No, it's not minus 1/3. So the reason why I should always think about the educational component of it. We've probably started to have a little bit of trouble in this candle, but even then, I'm not taking anything off the table in that candle. This candle does it all at once. It takes out this trough here, so that is a minus 1/3 in itself. That is a minus 1/3 in itself, and the candle is a minus 1/3 in itself because it's a species-ending event, and therefore that gets us to zero risk position. So I'll try and keep the educational component going. In all of this, Vulcan has been frustrating because it kind of looked good, looked bad, looked good, looked bad. And I must admit, I took the bait in the watch list on that day there because I saw a big white candle and some decent volume supply removal, some bit of interest coming back in. And then the next one would have been on maybe that one there. But we are unfortunately beneath a couple of clear points of demand that, if all is going well, we shouldn't take out these points of demand. So therefore I have to conclude all isn't going well. And look, I think at the most on this one, you could have 1/3 left with the final third to go under here. But that is absolutely final because it's starting to look pretty darn awful under there. So for me and my gut, I'm going to say zero risk position as well. And I hope, look, it's a weird thing to say, but I hope the market picks up again, and I hope we come back and we go, shit, look at all those ZRPs right at the bottom. That's okay too. We'll be in a better market. We'll have other setups to trade, but I'm a ZRP on that one. Those three, I'm sorry, Michael. Transfusion day, he says, minimum 1/3, just about everything. Mate, I went bigger than 1/3. Hanelli asking about CBA, and like I said, this is the most run stock I've had since I restarted my watch list back here in May, and I was very, very upfront and said I will not see the top coming. Nobody knew this was what was going to cause the top, and it's frustrating. It's a bit like that drone shield trade where you expect to get a normal signal, a lower peak, an upper shadow, a little bit of a break of a trough. You don't expect it to go vertically down like that. Unfortunately, again, we have taken out a couple of important points of demand here. And that candle in itself and the gaps mean I'm zero risk position here. But, and I don't like to keep using this word, under normal circumstances, you might have got out at 132, right? It's not going to happen this time. I'm sorry, Hanel. I'm going to stop saying I'm sorry. I am sorry if it hasn't turned out the way you thought, but it's me saying sorry ain't going to change anything. Let's go to BBOZ. BBOZ, which is the short, not coming up. It's all right, it'll come up. or is that in the US? I thought it's here, isn't it here? We do have it here. Okay, so I think the question now is, well, how do we start to short? How do we take advantage of the short trades? This is one way you could do it. You're shorting the whole index, I think. Strong bear, Australian strong bear, it has to be the ASX 200 surely, because it's the opposite. Yeah, it has to be, because look, 2 days ago it was at its low point, because the ASX 200 was at a high point. So yeah, it looks to me like it's shorting the ASX 200, but it's important to know what the hedge fund here is shorting. And basically, if don't look at this as, well, I'll do my technical analysis on BBOZ, and if that's looking, if you're trying to actually look to go long this, right? Because long this is short the ASX 200. Look at the ASX 200 chart and say, would I short it? So I think that's the way you want to tackle this, because this chart will never be as clean as this chart here. And remove this idea that you can't short that chart, okay? Because that's not true, because we do have this thing up our sleeve called the aggressive setup. But aggressive setups tend to come after long base patterns. You wouldn't say that, so for a long base pattern in this case is a long sideways consolidation period. We were heading up. I know if we saw this candle, so if we saw this candle here, right, after this, like, holy dooly, that is an aggressive setup. The problem is it happened after this. Nonetheless, I still think this is a very big, very black candle. It puts a lot of supply in the market from a lot of traders who are caught out, who would just love the market to go back up, to sell some. So look, I don't mind it, Nicola, is the answer. If you're trading a big white candle there, you're trading a big black candle here. But I would treat this as an aggressive setup. So the why is less important as the how much. And we say that all the time here. So let's go back to the BBOZ, which it's not in there. Let's go BBOZ. And say that I don't mind, but see, I'd be like a +6th on this, and then try and find some other stuff to short. While we're on the topics of short, there's also bear is another one, but what is this one shorting? I think this is pretty much shorting the same thing. So don't do them both and then think you've got 2 different trades here. Don't go, I'll put a 6th on bear and I'll put a 6th on BBOZ, and you know, that's okay. I've got 2 aggressive, they're the same trade. Okay, so pick one of the 2. That's my understanding. I've got a raised hand here, and let me know if I've done something technically wrong here, whoever raised the hand. It came up, flashed up for a second. I couldn't see who did it, and nor can I see where the hand is, by the way. Oh, okay. What am I doing? I can raise a hand. What does that do? So just type a message, and I'll have a look at the message, whoever that was. Let us go to, on this topic of shorts, and have a look at some shorts. I've got a long list for you, and it's in this one here. Now you have to check if these are short sellable on your particular platform. You might have a CFD platform, and they are limited to typically sort of the top 200. So some of these may not be there. So double check that. But you know, I'll just say something like that. So look at the shapes of the charts. If we were to turn these upside down, if we were to change all the black candles to white candles, you know, the trend ribbons from pink to green, and the lower peaks and lower troughs to high peaks and troughs, you know, they'd be longs. So that one is Alpha HPA. Ordinate, which has been coming up in my list for a long time now, has finally broken down. Adriatic Metals, Auckland International is about to break a big level there, but a bit flat overall. I think this one looks good. AP Eagers, this could be a results oriented, and this is the other problem, is that we're about to enter the hand grenade. The reason why we flick to the weekly is just to see what the potential is. Okay, are there any major points of supply outside that I can't see? Much like we would look for any major points of demand here, much like we'd look for major points of supply when we're looking at those US stocks. Bapcor, so this is more of a turnaround play now, isn't it? If this was touching the light green trend ribbon and then turning up, we would be looking at it as a turnaround play. So this one is coming down. BGL, huge gap here. We buy gaps and white candles, so it makes sense to sell gaps and black candles. BHP about to break a pretty decent level. They're hard to see because I've got the scratchings on. Bannerman, these are continued to free fall, but these have been in the list for quite a while. CKF's been there for a few months. CTT, CXL, I think you get the drift. You can, wait for the list to come out tomorrow. Dicker data. Look, I have to put these in. Try and fuss out something that's a little bit more of a coiled spring, but I have to put that in because that's my model. Personally, there's nothing wrong with for me. Minus a third on that one. Fortescue about to break a level. IGO has cracked, and you can see just the beautiful trends on some of these. Iluka, the number of times I've heard people say Iluka's great value. It's hilarious. IPH, JIN, Johns Lyng, Karoon. Hopefully you don't own any of these stocks. That's the first step. LTM, MND, they're all stalwarts. They've all been in this list for a very long time. Megaport, I think that's a really interesting one there. That would be a classic turnaround play. Imagine if we turn that upside down. We'd all be aggressively buying that, wouldn't we, as a turnaround play? Main Pharma, PPT. Regis Resources, S32, Smart Group, another turnaround type play. That one also, that's the dink, breaking through the long-term trend ribbon, dinking back, can't get through it. I mean, look at my ribbon for crying out loud. Hitting both, just touching both ribbons. STX, for some reason, a fan favourite. I don't understand it. Tabcorp breaking through. Tyro, that's starting to be a turnaround play. URW, Weebit, Cactus, WCA, and look again, double check Woodside about to go. So they are some shorts if you want to go that way. I'm happy to go plus 1/3 on any of them. Let's go back to your requests. Nicola's saying that futures are heading for another bloodbath in the US, and it is so irrelevant where they open tonight. It's don't watch the open. You might want to tune in, whatever hour it is, early in the morning for you, an hour before the close. Just watch the close, because that's all that matters. The open tonight is so irrelevant. In fact, the lower it opens, the better if a rally kicks in, because it's just going to be a bigger, shadow, downward pointing shadow. Sudesh, for the webinar crew, look at OZBD. OZBD. Let me try that one for you. OZBD, which is the bond index. So a bunch of these came up in my long scan. So I actually did have some longs today, and we'll go through them here. All of Capricorn metals still looks okay. Gold stock there, obviously the gold index, which is got to be something to do with currency related there, because obviously the gold price isn't doing much. Consumer staples, very defensive sector. Magnetic Resources, which we've looked at recently. Newmont still looks good. We've got a FRP on that one, and this one here, which is the infrastructure index. Within these, however, there were several, for you, Sudesh, bond ETFs, and I didn't put them in because you just have to be careful, a little bit careful with these. OZBD, we'll use your case study. In fact, I think this one might have been on my list. There's a very small, you have to watch the scale, okay, because we're talking bond prices here. Bond prices don't have to move much to get a big move in yields. We're seeing, so if this goes from 45 here to 46, maybe that's a big move. What does it say? Let's have a look at the weekly chart. I mean, maybe that's the upside. Okay, so just understand all of those ones that came up. A big move would be 2, 3, 4%. A massive move would be 5%. Okay, and you're going to be sitting there looking at your white candle, going, "What a great white candle," and then seeing that you just made 30 cents on your trade. Okay. And your opportunity cost of making that 30 cents might have been something else, given there were some other really great things that were moving. So just watch the scale is my message. Yes, several, as in probably a dozen bond funds came up with wonderful looking charts, but just be aware of the scale. I took them out for that reason, because I don't want people looking at my uptrend list and buying these, and then I stop covering them because they don't have a white candle the next day, and they're in them for six weeks or 6 months, making 2%. But you get the yield. That's the whole point. of your bond fund. You're getting your risk-free yield in the process, okay? You guess it. People will trade bonds to make capital gains and losses, but the ultimate goal is that risk-free yield. So just be aware with that. It's a great question that you've asked, and I'm glad you did. From Peretz, what are the indicators we should be looking at to start buying? That's very simple. A candle that looks like this, but preferably with an even longer downward shadow, or a candle that looks like this. Let me go to a stock, because we're not going to find it in this particular chart. Let's go to, I don't know, what can we look at? Something that's quite active, that kind of isn't a commodity stock, that kind of moves with the market. I mean, we go for a bank like CBA. Even then, we're not going to see a lot of these, are we? So something like that. Ideally, we see, so I'm just trying to point them out, we'd see some decent volume coming in as well. So the price, volume and volatility all coming together. Let me see if we can look at the major turning points. So we are seeing it here. So there we go, see some nice white candles coming in. We're also seeing an influx of volume, and we're seeing, didn't see so much volatility here. There's your volatility, a gap and run, Peretz, that's the candle. There's a gap, wasn't supported as much by volume. I'm trying to find the ideal ones here. We may not find them, but they are the hallmarks of what we want to look for. And let's look at more stocks, and I'll keep a special eye out for them on the stocks. I'm sure we will find several examples. I'm probably just not looking in the right place. Let's go to ACW. Had a great candle. I nearly put it in today, actually. It just stayed out of the list because ultimately we're still in a medium-term downtrend, so we're facing this sort of price action. And before I can put that back in a list, I need to see at least a higher trough at DINK, and then I might be prepared on a decent candle somewhere in here to add that back in. But I think if you've got it, you're okay. I would challenge whether you would have a whole position here, especially considering we talked about here as a minus a third and here a minus a third, and we have said in the past that if it was to close beneath, and it hasn't yet, to its credit, beneath that level there, we would minus the other third. So on that day I said out 2/3, holding a third, and then we should just put here for completeness so everybody's on the same page, close beneath, and that will change now. Okay, so let me draw that to here, and that has now been superseded by here, and we will go just a little bit, we're 0.5% below whatever it is. We can't do 0.5% on this, it might be 0.01 of a cent or 0.02 of a cent, and we're going to go close below minus 1/3. Until then, you're okay. As far as adding a third, I need to see another kick up and some decent candles. Let us go to Peter ENR. Let me highlight these so I don't lose them. ENR. It's not working. We've got some problems here. So we said last time, sort of on a close beneath this level, and we have closed it, and the candle today wasn't that great. So this one's pretty simple for me. We just go ZRP on this one. There's no, that's it. Do not pass go, to not collect $200. That's ZRP. The CAT, frustrating. 2 candles ago it was looking absolutely hunky-dory, and like many. Not so hunky-dory now. We are probably just hanging in there beneath that one. Yeah, it's very close. I would say next candle would be minus a third. I wouldn't complain if you just did a third to start off with, and the next close was another third. But let's just say close below minus 1/3 as a very minimum, and then you're looking at, you've got other levels here, so you can maybe look for your second, third under here, and it's just about, you just got to remember, my methodology is in for a good time, not a long time, and if we spend the next 6 weeks, 6 months going sideways, there's going to be a death of 1,000 cuts on anything that looked good today. You get so accustomed, you get so anchored in Codan being invincible, right? Don't be fooled by what it did up to this point, right? When tide changes. It changes. And the best can go to the worst. So that's the way, I think that's the way I'm looking at this. And if you wanted to, if you were, not me, and you had some love affair with this thing, maybe you could hold a third to see how it goes underneath the trend ribbon. That's absurd for me. I think I'm more of a that way inclined. I can't grab it now. Yes, I can. Here we go. Thank you for those two, Peter. Okay. Actually, I think I've done Peter. That was Brett. Let's go to CVL. CVL. Actually, not bad today, was it? Like it put up a fight. To its credit, it put up a really good fight today. Okay, let's say that, because there's a little point of demand here, right? But it didn't close beneath it, so that's okay. But it wasn't far off it. And if you're going to say, well, I have to give this a chance, I have to look for where the demand is, and you're doing this every candle. Where is the demand? Where should I be safe, or where am I not safe? Probably is the best way to put it. If it gets beneath that price and it's there now, is this candle in and of itself a minus 1/3? I don't think it is. As scary as it is, we can be very biased here. We can say that's a scary candle, but it's still closed significantly off its lows. Decent volume. There was supply, but there was some demand in there as well. I think if it closes beneath here, I think it's a 2/3 proposition, because, and I'll tell you why, because to get down there, you've taken out this point here. That's a point of demand in itself, and this is obviously a more traditional one, but I think that shadow there represents a point of demand. So close beneath there is minus 2/3 at least. Close less than is minus 2/3. Let's go to okay. John's saying he sold CVL today. Look, I think you're okay. I don't think you're going to regret that decision in the near future. Okay, SDV, which is still actually fine. Like, let's get some perspective here. It's still fine. Like the other one, had a decent lower shadow, and it just shows you how strong these stocks are, how strong the demand supply environment is in favour of these stocks. But, and there's the but, we don't have, that's definitely a down, and then we don't get an up. So this is all one move. Really, it is all one move. Yeah, look, I'd be watching. Obviously, this is the key level. Everything pales into comparison. I think you can give this a little bit of room. I still think your FRP. This also should be a level here, and maybe the way to play this is close less than short-term trend ribbon as a precaution. You've got to have some area where you're going to do it. It's a hard one because you've got this huge white candle. You've got this level here. That's why the short-term trend ribbon there is there as well. Okay. Dare I say FRP for now on that one with those levels to watch. Let's go to Nicola fixed interest ETFs. Yes, definitely they were on my list today. VIF, 100%. That was on my list today. Let me go zoom normal, and you go, oh wow, that looks amazing. And then you go, well, it's gone from 38.2 to 39.2, like decent, like this. But okay, what had to happen in markets? You had to have, you had to have an absolute meltdown in 2 or 3 segments of the market to get a 3% move. Otherwise, for the most part, they haven't done a whole lot. Oh, they did trend there. Hey, buy some. You're going to get a decent yield. I don't know how often they pay them. If it's biannual or quarterly, go check that. But this is where people hide. This is where people hide their cash. Okay, when the poo-poo's hitting the fan, that's the way you look at these, and you might pick up a few percent in the meantime. Okay, we're not looking at this to say, oh look, we're going to make 30% on our capital on this. That's just not how you look at that trade. The move is from 45 to 46. Let's go to Woolworths. This is looking good and has completely turned around. This is ZRP. There's not even a question about it for me, unfortunately. So here, but today solidified it, didn't it? It all happened at once because of this and the candle and the gap and the close on the low, the close beneath the long-term trend ribbon, the close beneath the short-term trend ribbon as well. Francine. PLS did hold up pretty well today, but the trend is still very well established there. So for me, that's still in trouble. I still feel there's a sense of inevitability here. And if we look at its best buddies, they look pretty terrible. You could certainly argue that Pilbara has its own certain fundamental attributes which makes it superior to some of the ones I'm showing you, and maybe it does. And maybe that's why it's holding up relatively better. That one held up relatively well today. But just on iron ore and BHP and Rio, you would ordinarily associate a risk-off days like today with big falls in those stocks. We didn't really see it, and I think that's because the iron ore price held up, the lithium price held up. Okay, this wasn't a commodities thing today. This was a financial system thing, isn't it? And that's kind of unusual in itself. We normally hear copper went up, copper stocks went up, copper went down, copper stocks went down. This is very much a financial system issue here. Let's go to CRED. Definitely came up on my list, 100%. That was on my list, and again, ditto, no problems. If you want to stick some cash there, if only just to see how it works, why not? Why not? I don't think you do too poorly on them. If you lose, you're going to lose 2% or 3%, right? You're going to earn a yield in the meantime. So if we get a protracted, prolonged period of stagnation in the market, these will be an adequate place to stick your cash, and a few of them have got them today. So full credit in picking them up. There you go, GOV, effectively doing the same thing. ACW was up today. Barry definitely talked about that one, and KLI was up today. I didn't see that one, but you're correct. Bit of an upper shadow, but still a commendable performance today. That one's not for me, given the upper shadow, but it did do well. Hi, Carl. Sometimes you talk about holding for a better exit point on individual stocks. Does this type of risk event, does that apply today? Yes, I do. But I think you've got to, where you've seen those really bad candles, like gap, full black, upper shadow, close on the low, there's no holding for a better position in that case because it's clear cut. The ones where you might hold for a better position are the ones like was it CVM, CVL, CVM? Yeah, that one. There you go. That's the sort of one where you might say, look, there's clearly some demand. Let me see how that demand works its way in the system. Tomorrow I might get 126 and I might just knock it out there. Or I might let it get to 126, see the shadow start to form, and if it gets back to 122, I'll get out there. But I've given it a little bit of extra time. So those ones they're the more sort of, I can see why you'd give it a little bit of extra time sort of things. Whereas, what's that? Forget that. That's an old crypto chart from back in the Think Markets days. So I'm going to even delete that. That does not need to be there because that ends in August. What August? You buy that. That looks pretty good. That's probably why I talked about it on whichever day I appeared on Ausbiz, 22nd of August, 2022. So forget that one. Delete that. Yes, delete permanently. I will not need that chart again. I promise you. That's the candle. I think we are going to struggle to wait for a better exit point on Rebecca. And Ellie's saying, I sold Lovisa, can I nibble again? Well, let's look at the candles. The candles are not telling us to nibble at this stage. Doesn't mean we can't nibble. I had a question earlier on from Peretz. What are the nibble candles? That's a nibble candle. That's a nibble candle. If you can find it at an area where we have some decent demand. So keep an eye out for these. This is kind of your homework now. Because I don't mind these. These are aggressive setups. We put less capital on them, but we're fishing Like, we're fishing for the things that we're normally looking for, right? So dynamic demand here, proven demand zone in the past, but only if we see the right candles, some volume to say that selling has exhausted itself. So for me, no, this is not a nibble for me, Hanelli. It is more of a wait for the nibble candles, the white candles and the lower shadows in the right places. Okay, we're looking for demand to manifest itself as these candles in the demand zone and also be confirmed with volume. David saying, sorry, Carl, I raised an error. No worries. Mesoblast. Again, one looking very good. You notice that this has not been in my uptrends list. That's because it's Mesoblast. I don't trust it. And that is a psychological impediment I have with this one. Sometimes it doesn't work to not trust it, but most of the time it does work to not trust it. Look, this is ZRP. It's got ZRP written all over it, and probably from as early as these candles are not good in and of themselves. They close beneath the light green zone, and then I think here you didn't need a crisis in Japan to dust, I reckon, 2/3 on that candle, and then maybe another third on that one, or your final third on that one, and certainly on this one. This is a zero risk position here. Okay. From Matthew, hi Carl, I currently have 10 stocks in my portfolio, all in the US. Let's go there now, because that's the bottom of the list. Don't ask any more Aussie ones. We're going to head back up. Perry's putting his in. They're diversified enough, and after last 2 nights candles, they've all got species-ending events. Welcome to the club. I'm still 2/3 in my bad, so at least you're 1/3 out. I don't want to sell, but you've taught me the importance of protecting capital. Good. Can you explain why I shouldn't watch the open tonight and try and get out? Oh, okay, well, that's different, yes. Maybe I should have provided more context there. I know everyone will be desperate and chasing the selling down. I really don't want to get caught in that either. Sorry, long question. That makes a lot of sense. You put me on the spot here. Okay, so I said don't watch the open, but looking at it from the perspective, not trying to buy, but I just don't think the open's going to be important tonight. There's going to be a lot of selling on the open. We're going to open down, okay? Obviously, it's binary from there. We either stay down, in which case that's the worst case scenario. Well, we're in big trouble. If we open down tonight, we close near the lows, there's more to come. But if we open down tonight and people get some perspective, and that perspective has to come from confidence in that the worst is behind us, don't get me wrong, and we close near the highs, that should set a floor and should set a big point of demand upon which we can potentially resume this bull market. I say potentially, but I'm still confident in the bull market because the long-term trend is still up in most cases, right? I'm not saying that because it's a gut feel, I'm saying that because it's a price action feel, okay? So I want the prevailing trend to perpetuate. That's the life is easiest when that occurs. So that's why we're watching not the open but the close. Now, if you're looking at it from the perspective of, well, I got risk in the market, mate, and I've got a bunch of species ending events, which means I need to act tonight. And you're right. The problem now becomes I'm potentially throwing my selling into that wall of motivated supply we talked about at the start and into a demand vacuum. And I could get some very poor fills. Why don't you give me your 10 and then we can look at them. Let's head to US stocks and I can tell you, give my opinion on whether there's an urgency or not. I'm going to go here and here and my son's sitting here in the corner. He listens to these, and it's great he's listening tonight because he's going to get a lot of stuff that I might not have thought to teach him. And I just don't know if you heard me say the F word under my breath there. Bitcoin. What did we say last time? We said plus 2/3, were we? The problem with Bitcoin is it's a risk-on trade, and it does get caught up in these risk-off moves, and that's what we saw today. don't ask me about Bitcoin. I regret it comes up there by default. Let us go to Perry's, and then Matthew's letting us know he's some. You don't have to. You can give me 10 or you can give me 2. It's up to you, Matthew. But Perry's got MSI, Motorola Solutions. How did you do that on Friday night? Look, on the basis it is copy paste and FRP. I don't know where it's going to open tonight, and that's the thing. So just give it the first 15 minutes to 30 minutes of trade. If it opens within the top half of that candle and just, starts to move higher, or it's moved higher, if it opens within the top half of that candle over that 30 minutes and has been moving higher, then go with it, okay? If it opens lower than that, maybe give it a miss. So let me reiterate, if it opens in the top half of that last candle, that demand candle, because that's where the demand is, okay? If we get more than halfway down, it's like 50-50, right? Who's winning the battle? It's like, presidential election in the US, 51% gets you over the line. If we open beneath that balance point, we call it the balance point of the candle, it's half of the range, there's probably not a whole lot to do. Look, you can check it at the end of the day. I would say check it at the end of the day then. If it's trading up towards the highs of the day, do that with it. Earlier in the morning, if it opens in the top half of the candle, and after half an hour it's trending towards the top, then just execute then. Okay, so a couple of options on doing that. And maybe if I reverse that around, Matthew's going to answer your question. But let me get default zoom there, and let me go save, because that's what I think about that one, FRP plus 1/3. But I suspect it's not going to open near those highs tonight. COR is the next one. I'm guessing not that one. Let's go to stocks. There we go. Senora or Chenora. I don't know. Cencora. Whatever, however you pronounce it, it looks amazing. Let me go to the weekly chart and see if there's anything out the corner of my eye. There is nothing out there. Perry's done it again. And I'm going to go ditto on that one. Yes, it's FRP. If you got it, it's a plus 1/3. If you don't, and yep, no questions asked. Again, watch the balance point of the candle early in the day. If it opens beneath that balance point, come back, check it at the end of the day. In both cases, you want it to be moving towards the top of that candle to add the risk. And last, but I'm guessing not least, is a BTI, which is the classic defensive trade when the world is coming to an end. And I'm guessing when you've got a bunch of Wall Street types out the front of those big office towers in New York, trying to release some of that nervous tension, you go and buy a tobacco stock, don't you? That's pretty stock standard defensive posturing on Wall Street. If you can get past the ESG element of this one, I think it's okay. I'm not as keen on it just by the very nature. It's more of a turnaround play. They tend to be more high risk than the continuation setups. But in the interest of having a mix of trades, I think it's fine. There's nothing so sinister there on that weekly chart that is really bothering me. I did sort of highlight a little point there, but I don't think that's going to be a huge deal, nor that one. I think that's going to be a huge deal. So on that basis, if you're looking for risk, this is as good a turnaround play as any. I mean, gap and run, and to see this chart does not surprise me at all. There you go. FRP plus 1/3. I am surprised. I mean, I started trading stocks. I started following US markets in the mid-90s. I grew up watching Paul Kangas on Nightly Business Report with Maria. Was it Maria? I can't remember her name. They're just a dynamic duo, the presenters on that. And yeah, that was the play, wasn't it? Defensive play was tobacco stocks. Matthew's given us a few to pick over the coals of. Get rid of that one. Save that one. Let's go here. IESC. That's fine. That's fine. Out of all the stuff we've seen tonight, that's one of our least problems. Let's go here. So I'm if you're 2/3, I think that's ideal. I think the 2/3 is the right place to be. If you're really jittery, close beneath that. If you want to give it a little bit of room, close beneath that, or you do this, you go close beneath that is minus a third, and then a close beneath that is a minus a third. And we're just setting some boundaries for ourselves. And if it doesn't get down there, happy days. If it does, we take our medicine, we move on. Because I think we'll find better setups than this anyway, to be fair. It's not the strongest setup out there in light of the two that Perry's given us. If you ask me, hey, would you rather have your 2/3 on this or add a third each to Perry's first two? I'd definitely go with a third each on Perry's first two. And that maybe puts things into perspective for you as well. FTAI, definitely one we looked at last week. Okay, it's still very strong. It is still very strong. And to the letter of the law, all the analysis we've ever done here would say this is still a full risk position. This is 100% a full risk position, and we would be watching carefully for a close. This level is still important, but now we have to respect this low. So a close beneath there, I think, is minus a third, and then just setting a roadmap for our exits. We've got infinite upside, but at least we know what's going to trigger us to protect our downside, what's going to limit our downside, and where we're going to limit our downside. Okay, minus 1/3 on that. At PRIM, and maybe Perry, you might have some of these as well. So, because I reckon a few of these might have been yours. Again, was looking fine. This is a bit more problematic because we've got the little gap here. And these two counter together in and of itself, I think, are enough to minus a third. We've also got a little trough in between here with close beneath. So I think at most here, you're plus a third. So this would be minus 2/3. Well, I think we're minus 2/3 up to this point, if I can say it that way. Which gets us back to your original question. Because this is the first one where I think you need to act tonight if you haven't done anything. I don't know where it's going to open. Does it open down here? Does it open down here? Just same method. See where it opens. Give it half an hour, and you'll have a low point, right? So if it opens at 48.64, and after half an hour it's trading at 49.58, let's hope that happens. That 49.64, that's the key level. It's the final 1/3 beneath that level. Because to the letter of the law, you under normal circumstances, we're just getting out around the open. Take the first price. It doesn't matter. We're just following our rules. And under normal circumstances, that's okay. We're not facing normal circumstances. We could get a gap lower. See if you get that money coming back in. If it keeps going up all day, you've got nothing to worry about. If it comes back in and then starts to make that new low, you're going to have to take some medicine, I think. Let's go to NVDA. Okay, well, I'm surprised that we are still on this one because we have had several signals. We even talked about it last week that we should not be in. And somebody asked about it last week going short. I said, yeah, you could do that. To be fair, it gone down. Friday was fine. Same, ditto, where it opens. At this stage, for me, it's a zero risk position. I'm mindful that it could bounce off that long-term trend ribbon and that may come into play tonight. I would say, certainly a close beneath Friday's low, that's a minus a third. We know it could open, what are Nasdaq futures down? I'm sure they're not still down 6%. I bet you they're not. I bet you they've recovered a bit. Let's have a look. That's rates. That's US. Yeah, they're down 2.5% now. So it might not be that bad tonight. Where am I going? I'm jumping around. BLDR, and then we're going to wrap it for this evening. BLDR. Builders First Source. A bit unfortunate on this one because it was looking okay for a turnaround play. to the letter of the law, because we've closed beneath this, that candle in and of itself and that gap, they're all reasons to at most have a third here, and that final third would come out on a close beneath 147.09. So let me just reiterate, close beneath 147.09 for minus that final third. You might want to use that methodology of just see how it's going after the first half hour. It'll set, hopefully we get a little bit of a rally, sets a low, and then you can set your stop loss beneath that low and then just go to sleep and not worry about it. PRIM is 48.44 pre-market. PRIM, let's check that out. 48.44, so somewhere down here. Yep. So same. See, give it that first 30 minutes. Okay, that's the bottom of the list. I'll give everybody a chance to have a final comment. Or a final stock. I might do one or two, but I'm not going to do many of them. Actually, a few people here. Nvidia is 13% pre-market. Shit. That is so silly. NVDA to have what changed? What changed? So the risk here is when I hear numbers like that, when I hear that's going to open down 30% after Friday's candle. What I feel now is I'm a fund manager. I just got smashed in Asia, right? I got my ass handed to me in Asia. I'm still up on Nvidia, or I've got a risk trade here. I now need to liquidate. And that's the risk tonight, is how much of that liquidation flows through to prices here and then how the Americans react to it. And don't forget, there'll be Americans that have lost money in Asia today as well. Okay, so what we want to know tonight is it's not the open, it's the close. Does the big money come in and say, oh, this is the best thing ever? I've been so short this market. I've been watching this market run away from me for months, for in some cases years now. And this is the liquidity event that allows me to get some money in on this dip. Because I know that the Fed is not in the business of creating bear markets, ladies and gentlemen. It's not. It won't. The Fed is in the business of perpetuating bull markets for the goodness and wonderment of mankind. And I'm going to take this opportunity to put some of that cash to work that has been on the sidelines. Okay, that's what we want to see. We want to see that close, that high close, that long lower shadow. 13% on Nvidia. Give me a break. Not that I'm saying to buy that. I just so not what I'm about. But that seems extreme. It's going to be an interesting 72 hours, says Michael. It could be an interesting little bit more than that. Peter's saying, missed my US CL Colgate Palmolive, which I think is going to be okay tonight, because it says, well, there you go, as defensive as you can get, says Peter. This is like buying, you can buy smokes and toothpaste, ladies and gentlemen, in financial Armageddon. This is what you go out and buy. And we're literally seeing how the mind of the US investor right here. Right, we've still got cash to allocate, right? But this is the stuff we're going to buy instead. That looks fine. I'd add some risk to that if I needed to add some risk. If you're in that boat of adding some risk, that chart is meeting all my criteria. So let's go 1 plus 1/3. Thank you, Peter. Sorry, Claire, I forgot yours. I'm so glad you're here. Your offline requests, I forgot about them in all the excitement. Zeta, let's go here, ZETA. Pleasantly surprised. I'm hoping this isn't going to open down 13%. It shouldn't. It's a great chart. Yes, we had a little bit of a blow off here. It probably into 25. It's one of those little pesky round numbers. But the price response on the demand side response on Friday is perfect. And I really like this chart. I'd happily add a third on this, even with that candle there, because I think the trend is very, very good. And I think Friday, and some decent volume on Friday. I think Friday sort of answered any questions I might have had on that. So if you're with it, I'd say stick with it. If you're not, look, maybe I'm going to just go short of plus 1/3 today, just given, we probably don't need to be adding a lot of risk. Let me zoom out. Let me go here. and here, and let me have a look. Yeah, maybe I'm just going to look, if you've got it, I'm happy to hold it. Let me get just one more white candle high close, and then I would go plus 1/3. Thank you for that one. And NHC was your final one, National Healthcare. Yeah, this one's got a slightly more of a problem, but it's only very slightly. And there's this, it didn't take out that. It hasn't taken out any points of demand. It's holding the short-term trend movement. It's got a little shadow telling you some demand's coming into it. I don't know when it's going to open tonight in all of the mucking around, but this is not enough to push me out of anything yet. Certainly a close beneath that low there would. So I'm going to go FRP for now, but not adding, for obvious reasons, not adding any risk at this stage. But I'm still FRP. I'm watching for a close below low minus 1/3 because it has had enough of a pullback, and that will close it beneath that last trough. Okay, I think that's it for today. Let me head back to the PowerPoint presentation and just remind you of all days that everything we've discussed today is general in nature. I don't know the future. I wish I did. What is going to happen is going to happen. It's going to happen to you. That's the disclaimer. The disclaimer is, ladies and gentlemen, shit's going to happen. It's going to happen to you. So learn how to deal with that shit when it happens to you. Trading is risky. General advice, seek the help of a financial professional. Not that they know what to do anyway. Ultimately, it's you and not I who's responsible for everything you do. On that cheery note, it's been an absolute pleasure chatting with you this evening. Now we'll take that one off and we'll go to this one here. Hang in there, everybody. All the best for your trading and investing. Until we catch up again. Bye-bye for now.